Hello everyone. I truly hope that you and your close ones are feeling safe and secure in today's environment. Today, our company reported its financial results for the second quarter of 2020. As you all know, the coronavirus pandemic has created serious headwinds for the global economy and the steel industry in particular. We had to implement a wide range of measures to make sure we maintain safe working conditions for our employees and contractors. One by one, our traditional destinations were imposing lockdown guidelines, which was impacting our sales. We estimate that at least 20% of steel consumption in our traditional home markets was heavily affected during the second quarter. In Russia, however, the sentiment improved after the construction activities in the Moscow area were resumed in mid-May. By the end of June, consumers' activity was fully restored to the normal levels. Elevated iron ore prices, coupled with decreasing coking coal quotations, contributed to our global competitive positioning during the quarter. Our flagship NLMK Lipetsk site was running at 100% capacity utilization during the whole quarter. At the same time, we had to adjust production in other divisions. Capacity utilization at our Russia Long Products division decreased to 65% in April and then began to restore, reaching 90% by June. Run rate at our European assets and NLMK USA remains low, at 66% and 50% respectively. NLMK Group's revenue in the second quarter of 2020 decreased by 12% quarter-on-quarter on the back of lower prices and volumes, as well as an increased share of semi-finished products in the sales portfolio. EBITDA was $582 million, which is only 2% lower than in the previous quarter, owing to wider price spreads to raw materials, ruble depreciation, and our additional efforts on operational efficiency and cost cutting. Our EBITDA margin increased to 27% last quarter. The group capex totaled $219 million in the second quarter, down 24% sequentially, as we optimized the payment schedule and timing of certain projects in light of market uncertainty. During the first 6 months of this year, we spent slightly above $500 million for the investment. The group's net debt to EBITDA ratio stood at 0.79 at the end of the second quarter and remained below the long-term target of 1.0. Our company generated more than $300 million of free cash flow in the second quarter, compared to $330 million in the first quarter. Working capital management initiatives provided solid support for such dynamics. As a result, NLMK's management recommended the board of directors to pay $400 million in form of dividends for the second quarter. The company remains committed to creating value for its shareholders, and I would like to reiterate that we stick to our dividend policy. Moving on to the forecast for the third quarter of 2020, we expect steel production at NLMK Lipetsk to decrease and stay approximately at the third quarter 2019 level, as we have started the second phase of major capital maintenance at the blast furnace and steelmaking operations at the Lipetsk site. I would like to remind you that respective maintenance is a part of the program to allow additional 1 million ton of steel production at NLMK. Let me now talk to you about Strategy 2022 implementation status. During the first half of 2020, the structural effect on EBITDA from operational efficiency programs was close to $100 million, with NLMK Russia flat and the mining segments being the main contributors. We are on track to deliver additional 1 million ton of steel at Lipetsk site starting from next year and concluded several major phases of the program this quarter, despite the challenges imposed by coronavirus. In upstream, we have commissioned new additional beneficiation section targeting the increase in concentrate output from 17.5 million ton to 20 million tons per year by next year. In downstream, we launched our new continuous casting machine number 9 in June. The upgraded machine will enable us to fully master the production of heavy slabs with increased chemical purity and structural homogeneity, a one-of-a-kind product mix in Russia. In the third quarter of 2020, we also plan to launch the new coal charge stamping project at Altai Koks, which will improve coal quality and reduce its production costs. To stay on the edge of innovation, we opened R&D Laboratory Center in Lipetsk for microstructure analysis, which will analyze the properties of steel to develop new premium products and optimize metal processing. We are also keen to enhance our customers' experience by increasing flexibility and the speed of deliveries. Launched this June, the new logistics and warehousing complex at Lipetsk site, with the ability to ship over 1 million tons of flat products per annum by auto, is designed to fulfill this goal. I am also glad to share with you our latest achievements on the ESG front. Sustainalytics rating agency has revised upwards our rating from 77 to 83 points, reflecting our continuous efforts in this area. I would like to thank all employees of NLMK Group who made these outstanding results possible in such a challenging market environment. I also highly appreciate investors' trust in our story. That's all I have for now. Thank you and see you soon.